and welcome to IMIN Weekly Crypto Update. My name is Sash Tharia, Chief Communications Officer. Let's dive into this week's news. Banks are edging closer to Ethereum 2.0 staking. Firms like IMIN and Bison Trails say it looks like banks could one day be key participants in Ethereum 2.0. It's a trend that will soon garner as much attention as institutional interest in Bitcoin. These firms provide the infrastructure to make running a staking node on Ethereum 2.0 low risk and easy to deploy. Unlike Bitcoin's energy-intensive crypto mining system, which seems to be under continual attack from critics these days, the next generation of blockchain networks use proof of stake, where blocks of transactions are added to the chain by a consensus of individuals, each holding tokens on the network. There are a number of proof of stake blockchains in operation today, such as Polkadot, Cardano, and Algorand. But the most eagerly awaited is the transition of Ethereum from proof of work to proof of stake. Ethereum 2.0 is a really big deal, said Richter founder and CEO of IMIN, who predicts the transition will make holding Ethereum in a wallet and earning interest as simple as holding a checking account in a bank. Now that would be convenient. Moving on to some unfortunate news for South Korean exchanges. They are now banned from handling coins they issued themselves. According to a report by airing on Thursday, cryptocurrency exchanges in South Korea will be prohibited from handling any coins or assets issued by themselves. The law also extends to any assets issued by family members, spouses, or distant relatives, and is expected to come into effect on June 26 this year. Businesses which fail to comply with the new regulations could have their operations suspended and face fines up to $88,000. South Korea's attempts to tighten its grip on the cryptocurrency industry within its borders has seen regulators demand information security management system certificates from crypto trading platforms, essentially acting as a license to operate. Of the 20 exchanges with a certificate, 11 have already delisted tokens or issued warnings. Given that many exchanges don't operate on a proprietary blockchain, the legal definition of what it means to handle tokens issued by an exchange may be stretched in the coming days and weeks, as South Korea enforces their new laws. Let's discuss some news on the Canadian side. Canadian Bitcoin ETF adds to its holdings despite steep market corrections. The demand for Bitcoin amongst Canadian investors has not wavered amid the latest price correction, offering further evidence that the market participants are capitalizing on heavily discounted prices. The Purpose Bitcoin ETF, which launched in February, has now accumulated over 19,500 BTC as of June 13th, according to BYBT data. The ETF has added 284.51 BTC over the past 7 days and nearly 2,000 BTC since May 15th. Inflows into Purpose ETF suggest Canadians aren't concerned about Bitcoin's short-term price action and also suggests that many investors are ignoring short-term fluctuations in favor of a long-term view. Fund managers in the United States hope to replicate the success of their Canadian counterparts by launching a Bitcoin ETF of their own. As mentioned in previous week's news, United States Securities and Exchange Commission has begun a formal review of 3 ETF proposals, with the first decision expected later this month. This week, I also had the pleasure of joining the Women in the New Economy conference. It was very inspiring to have a room full of intellectual women involved in the blockchain space. Hearing the stories of women sharing their struggles of opening bank accounts and the freedom they have received from using self-custody crypto wallets. I would like to continue to encourage younger women to not shy away from this field, rather to reach out. I would also like to thank organizations such as Blockchain Consortium and IMIN for their amazing support. Thank you and join us next week.